Hey, everybody, and welcome back to Christopher Garza Real Estate News. Let's go ahead and get right into it today. Happy holidays for everybody out there as well. So it's been an interesting December, actually. Interesting November as well. This is a news article from WRE News. So existing home sales up for the first time in 5 months. It does highlight a couple things as far as existing home sales inched up in November, breaking a 5 month streak of consecutive declines. So we were having a lot of declines. A lot of that was kind of seasonal, but a lot of that was due to interest rates as well. And so we are seeing kind of the opposite of what you would normally see, which is higher numbers in the later part of the year when you compare it to year over year. So not saying it's higher numbers. Again, we are super low on inventory. But when you say, and this is getting into it a little bit early, but when you are saying higher numbers year over year, we meaning when you compare summer to summer, we were about half the numbers. When you're comparing the fourth quarter, which is the winter, December, November, October, those years, or those, I'm sorry, months, they're actually somewhat on par with the numbers last year. So we're not half of what we were. We're on the same kind of par as they were. So that's interesting. And a lot of that does have to do with interest rates. So first time home buyers were responsible for 31% of sales in November, it says at the bottom here, which is super interesting. Was definitely talking about that in, a couple months ago on my last podcast. You are going to see a lot more first time home buyers coming on the market with these somewhat higher interest rates. Investors aren't going to be out there as much looking with these, the numbers just aren't going to work out. So, first time home buyers in NAR reporting, this is across all of the US, saying that first time home buyers are going to go up a little bit. Now, in Seattle, numbers are a little bit higher as far as price point goes. So, probably not going to see that as much, but super interesting that you are seeing that. And then it's really going to highlight down here that you're probably, especially in Seattle, you're not going to find distressed homes, but distressed sales represented 1% of the deals in November. So really, really does show the numbers in distressed sales, first time home buyers, and just kind of what everything is doing in this last quarter. So if you wouldn't mind, like, share, let me get my face out of the way, like, share, and subscribe. It would really help the algorithm and just get out great news to everybody. So the areas that I will be talking about is going to be residential only, not condominiums at all. Sorry about that. Nothing against condominiums, just reporting on a certain number, so or certain demographic, which is going to be the residential demographic, and the actual areas that I'll be reporting on it with the numbers and statistics. That article that I just read was all about the U.S. So the numbers that I'll be reporting on with the graphs and everything are going to be these highlighted areas right here. Now, with our interest rates and showing what they've kind of done, you can see here. Last time I reported, they were way up there and close to the eights. 7.8, 7.98, really, really close to the eights. They've definitely dropped down quite a bit since then. Ooh, kind of messing it up a little bit. 6.67 was the last one. Yesterday it was a little bit lower. Yesterday, the day before, a little bit lower. So it's coming up a couple, you know, hundredths of a point. But again, compared to what it was last year and then what we have seen the rest of the year, interest rates are really kind of making a big move down. So now when we talk about new listings, what's going on in the market, right here we see new listings have 10. We did have yesterday, Friday at 20 homes on the new listings, and we were at about 40 to 44 homes on the sold and pending. So right now, numbers changing a little bit on that. This is a 7 day average. So your 7 day average numbers are shown right here. We have about for every one home sold, three and a half homes are coming off the market. Now, yesterday was showing about two and a half homes were coming off market for every home sold. So with the interest rates, not a lot of inventory. You're seeing homes coming off the market a lot faster than what your standard January, December average days on market would show. Now, we don't have the numbers for those yet, but I will show you the kind of average percentage of list price as well as these numbers. And let me get my face out of the way on this so you can see these numbers. So this is the average percentage of original list price. So if you were to list it at $1 million and you were to sell it 6 months down the road at $500,000, then you're going to get 50% there. That's just an example. So we see here, this is throughout the year, starting in January. Interest rates super high in January. They started last year in March and kept going up from there. And we're seeing with that, the average percentage of last original list price is going to go down as well. So within this year, interest rates being higher and then kind of going lower, no inventory really, it's kind of a strange market. And we're seeing that here with 97.9% in the month of November, which if you compare it to last year's month of November, we have not too much of a difference. So you can see here 95.5. That's about 2% of a difference. Yeah, about 3% of a difference. 2.5, let's just call it 2.5 right there. Not a huge difference, but it is better than what it was last year. But then you look at the actual summertime, your April, March, those last year, about 109, 110%. And then we have just barely over 100%. So, this fourth quarter is actually doing really well as far as in our area of Seattle. And to also further show you that, we have new listings on market. It's kind of shot down with what you can see here. You have already half. These are the summer times with all these peaks right here. The March, it's mainly March through June is what you're seeing here with these peaks of percentage original list price, new listing on market, all these numbers, and then the actual the lows right here are going to be the fourth quarter. And so with our lows going into November at 296 for new listings, when you compare that to last year over year, 298, we're on par with that, which all these other numbers are cut in half. So it is kind of a strange fourth quarter, as I was saying. And pending sales, same kind of thing here. You can't really sell what's not on the market. So obviously you're not going to have a huge uptick in pending sales when you can't sell homes that aren't on the market. So again, 233. And then last year, when you look at that, it is going to be a little bit higher from what I remember. 239, which not crazy amount, but super interesting when you're looking at comparing to year over year, and it's right at the half. So this is the one that I found extremely interesting. With interest rates shooting up, you see a direct correlation with days on market. So 54 days on market. It's almost one of the highs. Back here 10 years ago was the high for the decade, but it's right on par with one of the highs of the decade. And that was just at the beginning of this year, and now we're coming back down here with 28 days on market. And then you again go compare year over year. You have in November here 32 days on market. So average days on market is actually going down, and a lot of that does have to do with the interest rates and them being so low. And so that's going to be the market update for this week. If you wouldn't mind smashing that subscribe button, and I will see you next week